Let's talk about VA assumable loans. Are they worth it or is it a downside? Let's get into it. In 2026, VA assumables are being called the largest real estate loophole, but newsflash, we've been doing it for years. Hi, I'm Charles Beaton here with Beaton Brothers Property Experts. I have done over 40 plus VA assumable loans for veterans and non-veterans. And yes, you do not have to be a veteran to assume a veteran's 2.5% interest rate on their home. So let's get into it. Let me tell you, this strategy can save you up to thousands of dollars per month, depending on what your home purchase price is and what existing loan is on it. Yes, there is a difference of thousands of dollars per month. Times that by 12, you do the math, it can save you a ton of money. And that's what we're here to talk about today. Let's go over a few questions first. What is a VA assumable loan? That is a simple response for me. It is somebody who simply takes a loan that is already in place. There are FHA assumable loans, VA assumable loans. Conventionals are not assumable, and the VA does mandate that all VA or government loans are assumable, but you do need to check with the servicer before you start the process to ensure that, in fact, the loan is assumable. Now, let's say that a home was purchased and there is a 30-year fixed mortgage on that property. 5 years go by. Now they only have 25 years left on the loan. And let's say that they bought that house for $500,000. Now they only owe $475,000. The person coming in to buy the house can assume that 25-year remaining life of loan plus the $475,000 loan balance. Now here's the kicker. If they owe $475,000 and they've owned the home for 5 years, probably worth, let's say, $550,000. That is a gap that you have to bridge at the time of closing. Now, if you have cash, that would be best, right? It's a $75,000 cash payment required at the time of closing. Or you can take out a second loan. There is a lender local to us up in Denver that has actually done it on one of my listings. Their buyer, I had the listing, the buyer brought $75,000 in additional funds to cover the gap on the VA assumable loan. Now, it made perfect sense there because the rate was at 6.5% at the time. The rate on the home with the VA loan was 2.5%. The difference was about $1,500 per month. For him to secure that extra, I think it was like a $70,000 private loan, was only about $800 a month. So it made perfect sense for that client. In some other measures, it's way more drastic. But in a nutshell, that is a VA assumable loan or a FHA assumable loan. When somebody comes in, they take the loan that is in place. Now let's talk about who is eligible to assume a loan. Anybody. You do not have to be a veteran. This is one of the common myths, that you have to be a veteran in order to assume somebody's VA loan. That is not the case. Now, there are repercussions of assuming somebody's loan and you're not a veteran. It is called a non-veteran assumption. I'm doing one right now, and the repercussions are that the entitlement that that veteran used stays on that house until that loan gets paid off, or until that home sells and the loan gets paid off. But bottom line, the loan has to be paid off. So let's use an example here. A veteran buys a house for $400,000. Years later, they do an assumption. They sell it to somebody doing a VA non-veteran assumable, and the loan balance is $360,000. When that home closes, that $360,000 of entitlement will remain tied up, and that veteran no longer has that. So, for example, in El Paso County, our conforming loan limit as of today, I believe, is $832,000. So you would have to subtract that $360,000 of entitlement that's currently locked up from the $830,000, and then that would leave you over with your buying power. So that is one of the negatives when it comes to a non-veteran assumable. But on the flip side, if a veteran is assuming this loan, then you get all of your entitlement back because the incoming veteran is the one that is going to use their entitlement on that home. I'm going to talk about one more perfect example that we had last year. A good client of ours, they assumed a loan. The purchase price of the house was $830,000. The rates at the time were 6.5%. His payment would have been close to $5,900. If I remember correctly, it was like $5,697 or something like that. So it was upwards of $6,000 per month. We decided to do the veteran assumable loan. It was veteran to veteran. So the seller was not going to lose their entitlement. So they were pretty okay with it. Typically, when you're selling your house and you allow somebody to assume your loan, you're going to get top dollar for it, especially if they're not a veteran. But even if they are a veteran and you're going to take the time to do the assumption, you're going to get top dollar for your house. So it's a win-win situation for all parties involved. Now let's get back to the facts here. $830,000 purchase price, $720,000 loan balance. So yes, you're probably thinking right now, oh my gosh, that's a $110,000 gap. And yes, that is correct. My client did bring $110,000 to the closing table. However, he secured a rate of 2.75%. Do you know what his payment was on that house? He went from $5,700 with a 6.5% rate to a 2.75% rate, and it was $2,900 per month. Now, taxes went up last year. That's taxes every odd year here. So his payment did go up to about $3,100, but that is half of the payment that he would have had. So let's call it, for round numbers, he saved $3,000 per month. Over 12 months, that's $36,000. 2 years. Added up, $72,000. It's unbelievable. And this is a real estate hack that I wish every veteran would use, and everybody that was open to doing a assumable loan and had the cash to do it. Now, you're probably thinking, Charles, why doesn't everybody do this? And I'm going to give you a few reasons why. Number one, it takes a lot of legwork. There are companies out there that will charge you 2% of the purchase price to just facilitate a VA loan assumption process, because it can take 3 to 4 months. I will tell you that we, for our clients, do it for free. We charge our standard real estate commission when we're listing a home, but we will facilitate that entire VA loan assumption process for $0 extra cost to our clients. Now, if we talk about the success story that we had, that is one of many success stories that we have with doing a VA assumption. That would have cost them about $17,000 just to have somebody facilitate this VA loan assumption process. We did it ourselves, didn't have to pay any company, and saved the seller and the buyer a ton of money. Now, it is a lot of work. So going back to reasons why you don't see everybody doing this, it's a lot of work. It's very labor intensive on the title company, the seller, the buyer. Oh my gosh, the agents involved. There is a lot of poking and prodding and checking in with the lender daily, if not weekly at a minimum, to say, hey, where are we at? What do you need from us? What do you need from borrower? What do you need from seller? Let's get this thing scooting along. Now, let's talk timeline, because that's always a very popular question. Now, the quickest one that we've ever done was 32 days. All right. Cornerstone Lending, shout out to you guys. It took 32 days for us to assume a loan, and then that person turned it into a rental right away. This was a non-veteran assumption. And yes, the VA changed the rules. Don't quote me on this. I want to say September of 2023, where you had to assume, or when you assumed a loan on a property and you closed, you had to live in it. It had to be your primary residence. When you do a non-veteran assumption, that is no longer the case. If you're not a veteran and a veteran's willing to give up their entitlement, you can assume that loan, get that crazy good rate, and then rent it out the next day. You do not have to live in it. Now, when it is your entitlement, now let's say I'm just going to assume somebody's loan, I'm a veteran, I'm going to use my own entitlement. Yes, it has to be my primary residence because I'm using my entitlement. If I'm going to buy a house not doing a assumption and just use a VA loan or an FHA loan outright, even a conventional loan, it has to be your primary residence. So that is a pro tip. I wish everybody knew, but common misconception, you do not have to be a veteran to assume. Now, 32 days being the fastest. The longest one that I've ever done, I'm actually doing it right now. I think we're on day 126 right now. This is a non-veteran assumption. It's a dual military household. They're not too worried about their entitlement. And my buyer is assuming their loan at 2.5%. And we are going through turbulence. This lender is the absolute worst. I'm not going to mention them, but oh my gosh, this is the longest one I've ever done by about a month and a half. Before that, the longest one I had ever done was 89 days. So I would budget 2 to 3 months at a minimum to do a assumption, whether it's veteran assumption or a non-veteran assumption. We're typically seeing on average 72 days. Anywhere in that 68 to 89 day range is a very popular date range for when we're doing these. And again, this is coming from a real estate agent here in Colorado, real estate broker, and we've done over 40 of these things. We've been doing them like they've been going out of style. Now, just because you can do a VA loan assumption doesn't mean that you should. If the rate's 7%, should you assume that loan? Probably not, because the rates are better than 7% today. Now, if the rate is 2%, which we've seen a few of those, 2.3, 2.4%, if it is that low and the gap that you have to bring table is $40,000, like, should you do it? Yes, all day. I don't care if you have to go to a corner and beg for $40,000. You need that house. You need that rate, because we probably will never see rates like that again. Now, if it's a 3% and the person bought it in 2015 and somehow they have a very low rate, maybe they refinanced during the COVID years and the gap is $300,000, should you assume it? You could, but that's $300,000 you're bringing to the table to get a lower monthly payment. If you have that type of cash, you're probably not worried about the monthly payment, in my opinion. Now, it has to fit the bill. There's very certain circumstances or very circumstances where it makes sense. When the person doesn't have a lot of equity, so you don't have to bring a crazy amount of cash to the table, and then the rate is good. So that is the perfect scenario when all those stars align to do the VA assumption. Now, with that being said, come and go. My grandfather assumed somebody's VA loan I believe it was in the late 70s. So this concept has been around forever. It's super popular. They started happening a bit in 2021. The rates went through the roof. I think they went up 3 or 4% in a year. We were doing a ton of VA assumables, and it's been slowly tapering off. 2022, 23, 24, we did a ton of VA assumables. 25, we started to do less. This year, we're seeing a little bit less, but that's just the nature of the beast. The rates are coming down. People that are selling, just depends what the rates are. Another concept that I want to talk about is, Charles, how do we find out if it's an assumable loan and what the rate is? I'm glad that you asked. You got to get with your local real estate professional. I will tell you, in our MLS, the Pikes Peak Association of Realtors, there is a filter that you can put on for VA assumable loans or assumable loans. It's a yes or no. If it is, show up saying, hey, here's the house, here's all the details, and it is assumable. Now, we're also part of RE Colorado, the Denver MLS. They don't have that filter up there. So what we have to do for clients up in the Denver metro area is we have to dial. We have to see, hey, they like this house. We can see if there's a VA loan on it or if there was an FHA loan on it. We can see those details, but then we call and say, hey, are they willing to do an assumption? Here in Colorado Springs or El Paso County, this entire area, it's too easy. We can see, yes, it's a VA or FHA loan. Yes, they're willing to do an assumption. And most realtors, including us, will put the details right on the MLS. What the loan balance is, what the rate is, what the monthly payment is, what is included in that monthly payment. We typically call it PITI. You have your principal, your interest, your taxes, and your insurance. Those 4 components typically make up your monthly mortgage payment. So is how we find out if they are VA assumable or not. Now, I have done in past videos what makes our town so great. And again, I could talk about this all day. I'm sure you've heard it all, but we have 6 military installations within an hour drive. Do you think we have a lot of VA loans? Yes. Do you think we have a lot of veterans that are getting told they have to move? Yes. Do you think that there's a ton of VA assumption opportunities in El Paso County, Colorado? Heck yes, there is a ton. So if you have any questions about this and I'm not answering it, DM us. Put a comment in the video. If I didn't address it, I'll absolutely address it. But I will tell you that this is something, I was at a conference a few weeks ago, and these guys that get paid millions and millions and millions of dollars to give us realtors information in the entire world. We're talking about VA assumptions in portable loans. And I'll probably do a whole nother segment on portable loans, but that's going to take legislation in a few years. And that's not something that's available right now. But I'll tell you what, VA assumable loans, they were on stage and they're like, this is a huge deal. I'm like, guys, it's a big deal. I've been doing this for years. And it's really arrogant. I'm sure I'll get called out on this, but I don't know a real estate agent, or at least I haven't met one, who has done more VA assumptions than we have here at Beaton Brothers Property Experts. We just do it. We're veterans ourselves. We understand the process. We did hire a few negotiators in the first few transactions. And then we were like, oh my gosh, this is easy. We wrote our own playbook and now we're saving our clients thousands of dollars. But if you have a question about it, let us know. VA assumptions are an absolute nugget, absolute gold. If you're in the buying market or if you're a seller, this is how you get top dollar for your house. Preserving that rate that we'll probably never see again is a real thing. Let's talk about some mistakes that are made. Number one, trying to do this without a real estate professional. It seems cringy to say that, me being a realtor, but I'll tell you what, there are so many things that go into it that a buyer and seller will probably never see because we're just doing it. And if you try and do it yourself, that 2-month or that 64 days that we're doing them in typically turns into 164 days. Again, it's very buyer intensive and seller labor intensive because a lot of documentation is required. And I'll talk about the process here in a minute. So just hang around of what it looks like from flash to bang, start to finish on these VA assumptions. And one thing I want to say, this is not some sort of like loophole or it is a tool that is wildly underused, that is not talked about. And again, I'll mention again why you don't see these a lot. They're very labor intensive. Some realtors will look at it and be like, oh, great, VA assumption, boom. They walk the other way because it's very labor intensive. It takes a long time to do over a 21-day standard loan closing. 21 days is not possible when you're doing a VA assumption. And let's roll right into the next topic, the process of it. We've already talked about who is eligible, what it is, what it requires, timeline. Now let's go over the actual process of it. Now this process can vary because there's 150 different lenders that we've done these with or that we've seen in our industry, our market here in Colorado Springs, but every lender does it a little bit different. Now, the one that I'm doing right now, they did it differently than I had ever seen. All right, so typically when you go under contract, you write that offer. And before you even go under contract, I'm going to backpedal. Your seller, if you are a listing agent or your seller, you need to let your lender know, hey, I would like to sell my house and have the option to do a VA assumption. They will send you the packet, which some of these lenders have to paper mail it before you can even get it emailed to you. So just plan for 2 weeks on that alone. So before you even list your house and you have a great rate, you should be contacting your lender or your servicer and saying, hey, I would like to sell my house and have that option to do a VA loan assumption or an FHA assumption. Now, once you have that packet, and let's fast forward, let's say that you get an offer, you go under contract. The seller is the one 9 times out of 10 who initiates the VA loan assumption process. If they haven't talked to their lender or their servicer already, they need to immediately. And they're going to get this packet. It's going to have seller information, buyer information, and you're going to have to fill that all out. So typically seller will fill it out. They send it to buyer's agent. Buyer's agent gives it to the buyer. They fill out their portion. And then you need to send this packet right back to the lender or the servicer. Once they get that, they need to go through it. And they're the ones that will say, yes, you're approved to do this process. And this can take 21 days in itself. Believe it or not, folks, we have seen it. I don't know why, but they take, and I do know why. I'm going to say it at the end here. It's going to be a little controversial, but it's something that I think I should say. Anyways, you get that packet, you approve it. Now, buyer gets approved, right? Now you're that ticker of 21 to 40 days starts ticking. You've been approved to do the VA loan assumption. And now this is when the lender starts making everybody jump through hoops. Now buyers are getting excited, sellers are getting excited. You fill out that packet, it gets approved, boom. Now buyers start submitting the plethora of documents, W-2s, pay stubs, rental history if there is some. I mean, all of your debt to income stuff, what your kid's DNA is. I mean, you name it, a lender's going to require it on these federal loans. Anyways, buyer gets approved, right? That will probably take the best part of 14 to 21 days. Now we're at 51, 60 days, right? Because you have to go through the approval process. The buyer gets approved. In the meantime, now we're doing home inspections. It's like a regular transaction. Title's involved, heavily involved. Buyers are involved, sellers are involved, listing agents involved, buyer agents involved, lenders involved. It's just a lot of moving pieces. You're going to have about 30 people working on this file to get to the closing table. Now, once you have the VA assumption approved, the buyer is approved, then they can set a closing date and then you close on the house. Really, it is that simple, but I'm going to say this. Lenders don't get paid on this typically. There's a loan transfer fee of like 0.5% sometimes. There are no loan origination fees because the loan is already in place. So I quite literally had a lender, and I remember this like it was yesterday. We did a transaction where we represented the seller and the buyer. It was actually a neighbor that bought the house. And the lender, I was asking them for updates. We started an email chain with everybody on it, and they just weren't responding. Well, 2 weeks went by. I finally just kept calling, and the lender goes, "Hey, Charles, how much are you getting paid on this deal?" And I answered him, and he goes, "Well, I'm getting $250. You guys are going to have to do all the legwork." Believe it or not, that is the truth. That actually happened. So from that day moving forward, and this was a few years ago, I kind of understood lenders aren't getting paid a lot on this. So this is their lowest priority. Now, since then, lenders have been assigning a person or an entire department is created for the assumptions because these are things that don't go away. We keep doing them, and lenders, they have to facilitate this because the VA or the government, FHA, they say that they have to. When you do a closing, when you're buying a house, not doing a VA loan assumption, or even when you are doing an assumption, you sign a document and you say that this loan is assumable. I've never been to a closing where that document wasn't in the stack of papers that a buyer has to sign. It will say this loan is assumable. You will have the option to allow somebody else to assume this loan. I've never seen it. Now, let's talk about things that have gone wrong. This could be a whole different video in itself, and we've learned a lot. But I'll tell you, I have never, to this day, the beginning of 2026, I've been successful 100% of the time when we've done a VA loan assumption. There's not been one time that I'm aware of where everybody wanted to get to the finish line and then we didn't, right? That has not happened. So I'm batting 1,000, knock on wood, not going to let that go. Now let's talk about things that could go wrong or have gone wrong in my doing this. Number one, buyer is not approved. In no way, shape, or form should you ever be making an assumption offer without having a lender approval. Well, Charles, we're not using that lender because we have to use the lender who holds the note on the house. That is correct. We do not want to go 3 to 5 weeks into this process, maybe 6 weeks, to find out that you are not approved. So I will not let one of my sellers accept an assumption offer unless I have a pre-approval letter from somebody that is a lender and said, yes, this person could buy the house. Now that is mistake number one. Never go under contract without having an approved buyer starting the process. That's number one. Number two, the second mistake that we see is sitting back and hoping that the lender will facilitate the process because they absolutely won't. You need to be the squeaky wheel on this one because squeaky wheels always get the grease, right? You have to start an email chain and at a minimum weekly, even if a lender's like, hey, we'll get back to you in 2 weeks, you need to send them an email every week at a minimum, say, hey, where are we at? That is a crucial mistake that a lot of agents will make. And once you get past the approval, you get assigned a loan officer. So that makes things a little bit more easy, but it is kind of a toss up until you get approval. So don't let it fall in the cracks. Poke and prod that lender every day. That's a lot, but at a minimum, once a week, just to make sure that they're on top of it and they keep you informed. We have found out email chains work out the best. And if we're not getting a response over days, we're picking up the phone as agents, it's the buyer agent or the listing agent. Typically, it's always us because we've done so many of these. I cannot tell you how many VA loan assumptions that we've done or assumptions in general where the listing agent's been doing real estate for 30 years and they've never done one before, or we're the listing agent, the buyer agent is very hesitant and they're like, hey, how do I write this offer? Well, I can't tell you how to write the offer for your client to us, but what I can tell you is, hey, when it comes to the assumption, this is what you need to do and this is what you should have in there. And then we facilitate the whole thing pretty much just because we've done it so much. Now, the third mistake that we see with VA loan assumptions is not setting expectation management as agents to our clients. Sometimes we will go under contract and the buyer's agent said that they've done them before. Well, then they start blowing us up around day 30 or 40. Where are we, Charles? My client needs to get in the house. Did you not tell them that these take at a minimum 2 months? And I would always budget 3 months. And they're like, well, we had a conversation, but we didn't really go over in detail. You have to have expectation management. Remember, the silver lining in this process is you're getting a rate that you'll never be able to see again. Will we ever see 2.5% rates again? Maybe if World War III pops off or another pandemic, which nobody wants to see, and I don't care if the rate is 0%, it would never be worth it. I don't know that we'll ever see rates that low again. So that is the silver lining. It is going to take an extra month or two. In hindsight, 20 years from now, is that really going to matter? You're probably not even going to remember it. So please keep chugging along. Never give up. If your buyer was pre-approved already with a different lender, odds are they're going to be approved for a lesser rate, which translates to a lower monthly payment. So that is huge. So that was mistake number 3, expectation management from the start. The fourth mistake that we see, and this isn't very common, but it's not doing diligence. We have been told multiple times, hey, this loan isn't assumable. I'm not going to call out this lender, but we were 2 weeks in and they said, hey, this loan is not assumable. And we said, hey, are you sure about that? Because I'm pretty sure every VA loan is assumable, right? Well, that's not true. Full disclaimer, the loan servicer is the one that has to approve everything, right? So what I did was I went to this client, and by the way, I did not help him buy this house, but they were in a pinch, unfortunate divorce situation. They had to sell, not a whole lot of equity. Anyways, I said, hey, do you have your closing documents when you bought the house? Well, a day later, they produced those to me. I went through them. Do you remember earlier in the video, I was talking about that one document where it says this loan is assumable? Well, there it was, like a knight in shining armor right in front of me. A piece of paper said that had seller signatures on it. At that time, they were the buyers, but I had their signatures on it. So what did I do? Scanned it over, sent it right over to the servicer, and they said, oh, all right, sorry, I guess it is. That's quite literally what happened. So number 4, just due diligence. Don't give up. Don't stop. Really, if you have an approved buyer, let's say it's a $700,000 house and they're doing an assumption, they have a pre-approval letter for $700,000, but the loan they're assuming is only $600,000 at a 2.5% interest rate, that is gold. A lot of false summits there, a lot of roadblocks from lenders. Don't stop. Keep going. Let's talk about something else. All right. Is there another question that we get? Is it on all homes? Can it be $1 million house? Can it be a $40 million house in Aspen? Can it be $100,000 house? The answer is yes, all of the above. There are no limits. Anybody can assume it. There are no blockouts for who can assume it, and there's no price point as long as it makes sense. Now, if you're buying a $40 million house in Aspen, I don't know that you'd be using a VA loan in the first place. Let's be honest, right? But at the same time, if the gap is $1 million or $2 million, does it make sense? Probably not, right? So yes, you can do a VA loan assumption on any price point. There are no hard stops with that. And finally, guys, I'll end with this. I just want to let you know that you're not war gaming the system. You're not gaming the system. You're not cheating the system. It's no loophole. It's common knowledge. You're using the system to your advantage. And I'll tell you what, this is a great way to buy a house. If you have any questions, we'd be honored to help you guys through this process. And we'll do all the things that we talked about. We'll set expectations. We'll make sure that it makes sense for you guys, because not every house fits the bill of an assumption. Again, I'm Charles Beaton here with Beaton Brothers Property Experts out of beautiful Colorado Springs. Thank you so much for watching. If I missed anything, shoot us a DM, make a comment, send us an email, give us a phone call. Doesn't matter. We'll be here. We'll be selling real estate here for a very long time. Thank you so much for hanging out with us tonight. Make it a great day.